This week, we're pleased to bring you part 2 of our exclusive interview with Dan Hultquist from Understanding Reverse. And we will be discussing how one can create a HECM debt avalanche, leveraging a HECM's line of credit, and the tools that our industry will need to help illustrate a HECM debt consolidation effectively. This and much more after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
But I'm not going to quibble over whether the Snowball or the Avalanche is more appropriate. The debt avalanche pays off the debts with the highest interest rates first. Now that's faster and it saves the borrower a lot of interest over time, but it's not as satisfying up front to be able to chalk up, a couple wins.
Yeah.
But either way, it could take years or decades to complete step number 2 using either of those methods right now. Why? Because you got interest rates of 24% or as high as 30% on some credit cards. So in some cases, you could map it out and say, listen, at your current trajectory, you'll never be debt free. The debt snowball or the debt avalanche, it doesn't matter. You're never going to get there unless you were able to, as an 86-year-old with leukemia, pick up a first or a second job, right? So it's just not going to work. If you're 62 and older and you've got plenty of housing wealth, just access your equity. If you're working with a good reverse mortgage professional, that could take maybe 30 to 60 days. Problem solved, move on to step number 3. Just take the money, pay off the consumer debt, and move on.
So, the debt snowballs is, psychologically motivating, of course, and you take that payment of the debt you eliminated and you apply it to the next one, right?
Right. Exactly.
So how can you create let's just make it a superior outcome, a debt avalanche with a reverse mortgage? How would that work?
Yeah, it happens a lot faster than an avalanche, right? 30 to 60 days. What you're going to do is you're going to apply. Obviously, you've got to go through the proposal stage, the counseling, and the application. But ultimately, you're going to leverage your housing wealth to pay off unsecured debt. But the reverse mortgage doesn't carry a monthly principal and interest mortgage payment. Just simply pay your property taxes and insurance. And this almost always puts a senior in a better position.
Let's talk about better position, because there's a lot of folks out there saying, well, I've got equity in my home. They're aware of that. And maybe they're looking at a HELOC or a cash out refinance to consolidate their debt. What are the advantages and disadvantages of that strategy?
Yeah, those seem to be the go-tos. Why don't I just get a HELOC, right? Well, it's cheap, but you kind of get what you're paying for. But it's possible the HELOC might be a good fit. It's possible the cash out refinance might be a good fit. But recently, they're just not attractive options, especially if the homeowner is 62 and older and qualifies. The HECM is a far superior product because of the security associated with the line of credit. I know I had my HELOC taken out from under me in 2008. I only had it for about 3 months and then got the phone call from Chase on the same day the letter arrived. And they said, hey, your HELOC's gone. Well, that doesn't happen on the reverse mortgage side. So you have a lot more security. The HECM is a much better solution, but there are a lot of dangers right now in getting a HELOC or a cash out refinance. Now, again, I'm not saying it's not the right solution. You want to look at each individual case. But let's take a look at some of the things that I covered in my article on some of the dangers of a HELOC or a cash out refi. It converts unsecured debt into secured debt, which can be risky. It typically increases your monthly mortgage repayment obligation. Now, it might reduce your other payments, okay, but now you have a larger mortgage payment. And thirdly, non-payment of a traditional mortgage payment results in foreclosure. Non-payment of a reverse mortgage doesn't.
So the interesting thing is when it comes to that debt strategy. And thank you for mentioning the HELOC, by the way, being frozen. Why did you get that letter in 2008 and 9 for those maybe who are watching that are unfamiliar with that process?
Yeah, 2008. And there was also a time in 2020, and some of the lenders still don't offer them back again. And so 2008 was obviously the big one because, hey, a neighbor foreclosed and immediately that's an alert, right? Things are happening in the market, housing prices declined, and suddenly they got nervous and they can pull that out from under you. So traditional HELOCs can be taken away very, very quickly with no explanation at all.
This whole concept of HECM debt consolidation, which I agree, I think many, even those you could call maybe mass affluent, could be struggling with their debt load today. And it does give them an option. With that in mind, Dan, what tools does our industry need to more effectively illustrate this concept of HECM debt consolidation?
Great question. In the past, we've just made this case intuitively. You get on the phone call with Mrs. Smith and say, hey, Mrs. Smith, let's begin by paying off your traditional mortgage. Let's take a look at what your residual income looks like after the reverse mortgage. And now you can use that additional cash flow to pay off consumer debts. But we really haven't mapped it out, have we? I think there's some good ways to do this. In fact, Jeff Birdsell and I have been working all summer, nights and weekends, because I have a day job, right? But we've been working all summer long to build some sales solutions that clearly and simply show some of the advantages of the HECM product. And this is one of them. This is going to be one of many things that we want to model. By the way, we've incorporated under the name Reverse Plus. And so hopefully within the next couple months, we'll be able to show you some of these tools. But we need to be able to graphically demonstrate to them, this is your current option. Maybe this is what Ramsey Solutions is going to advise. Here is our solution, and here's why you're better off. And so we need to be able to clearly and simply explain that to the client.
Well, I know our viewers could have benefited from this, and I could have, Dan, when I was writing a column on the importance of financial fact finding, and then even last week on the show, that I really believe we're missing a lot of opportunities, even where someone is short to close, right?
Absolutely.
There's a gentleman, I won't mention his name, but he's probably the top producer in the nation, and probably 50% of his pipeline, I've been told, is short to close. So how can you build value for coming in with cash at closing if you don't even know how that would change their situation?
Sure, that's just one more thing we can model is what's the break-even point, and does it make sense to maybe draw some from your 401k or IRA if you're short to close by $20,000, $50,000, $100,000?
Yeah.
Does it make sense in the long run to wipe out that required monthly principal and interest mortgage payment?
Well, Dan, would you do us a favor? Would you come back on the show when you call it Reverse Plus, is that right?
Reverse Plus.
When that is released, whether it's beta or version 1, we would love to see it and discuss this further, because I am firmly converted to the belief, and I have been for years, that financial fact finding helps the reverse mortgage originator be more of a solution provider than a salesperson. And I think your product is something our industry really has needed for many years.
Absolutely, it'd be our pleasure.
Well, thank you, Dan. And folks, that concludes this episode of the Industry Leader Update. If you'd be so kind as to share this episode in your LinkedIn profile, I see those of you that are doing that each week. Thank you so much. We do have a YouTube channel where you can subscribe and also hit the notification bell. That way you never miss an upcoming episode. And each and every week, we bring you the most recent reverse mortgage related news for mortgage professionals. It's HECM World Weekly, our weekly podcast you can find in both an audio and video edition. Thank you so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World. Have a great week.